Single candlestick patterns are highly effective and easy to recognize chart patterns in trading, and especially in day trading. These patterns help traders understand the market psychology and can present good entry and exit points. One of the popular single candlestick patterns is the pin bar pattern, a single bar that provides a strong indication for the next price movement. Today we will discuss about the pin bar pattern. So welcome to my channel Pivot Points with RK. Today we will discuss about this pin bar candlestick pattern, how it works in the day trading. So what exactly is this the pin bar pattern? A pin bar pattern consists of one price bar, typically a candlestick price bar, which represents a sharp reversal and rejection of price. The pin bar reversal, as it is sometimes called, is defined by a long tail. The tail is also referred to as a shadow or wick. The area between the open and close of the pin bar is called the real body. This portion is called the real body, and pin bars generally have small real bodies, sometimes even half of this in this picture it's being shown slightly a bigger, and while in the real trading system, it can the pin bar can be just half of this or even smaller than this, but typically a long tail in the bullish pin bar and a small upper shadow. The area between the open and close of the pin bar is called the real body, and this is the real body. And pin bars generally have small real bodies in comparison to their long tails. See, like if you look at the tail, it's longer than the body. It's quite longer, almost 2 to 3 times of the body size. The tail of the pin bar shows the area of price that was rejected. See, it shows that it has opened here. The opening was here, and it went down, and again the buyers pushed the price upward, and they took the price upwards, and the implication is that price will continue to move opposite to the direction the tail points. Thus a bearish pin bar signal is one that has a long upper tail showing rejection of higher prices with the implication that price will fall in the near term. A bullish pin bar signal has a long lower tail showing rejection of low prices with the implication that price will rise in the near term. How to identify the pin bar candle trend? First, you must identify the pin bar at the end of an uptrend or downtrend. Generally, in the uptrend, when the price is just moving upwards like this, it might go like this: higher high, higher low, higher high, higher low, like this. At certain point of time, we can see these kind of a pin bars, and especially this one, the bearish pin bar in the uptrend, and bullish pin bar during the downtrend. Make sure the candle's body is small and has a long wick. Use other confirmation tools such as support and resistance. So we need to see where these pin bars are getting formed. We have to make sure whether the pin bars are getting formed at the bottom of the downtrend or top of the uptrend. So there's either at support or resistance. And use other confirmation tools such as, again, on the support, resistance, RSI or moving averages to confirm the reversal signal. Enter long or short position after the formation of the pin bar, or wait for the candle following the pin bar candle to close. So for every trade, we have to wait for the complete closure of the candle. And these pin bars can be traded even for 5 minutes or 1 minute, 15 minutes, or even hourly basis candles. But for day trading, especially with the Nifty and Bank Nifty, the trading, it's always better to trade smaller time frames like 5 minutes, or sometimes even in 1 minute also. It's very effective trading, especially for scalpers. Psychology behind the bearish pin bar. So I'm just trying to explain in a simple phase what happens during the when the bearish pin bar gets formed, especially when the market is moving upwards. So I'm just showing you two candles here. Previously, there could have been many more candles like this here. And suppose we have marked some resistance level at certain point of time in the high. So we'll see this kind of upward candles. here the price opened here and it went up. The price opens and trades higher above any resistance level. Sometimes it crosses the resistance level, but the sellers take action and they start pushing down the price. After closing, we'll get similar to this kind of a formation. Before the end of the day, the base end of the day or end of the period. For example, if we are trading at 5 minutes time period of time, we will see after 5 minutes candle. This is the 5 minute candle, 5 minute candle, and this after 5 minutes gets formed something like this. Instead of this, where the price moved here and went up, but sellers took part and started selling heavily and they brought down the price here. So creating a small body for the day, the long upper shadow represents that sellers had started stepping in at this level, something like this. Psychology behind the bullish pin bar, the same way. So the bullish pin bar is getting formed at the support level after a downtrend. For example, assuming this is the 5 minute candle, after nearly 45 minutes of trading, and the price moved from upward to this downward for nearly some 300 400 points downward. So here it tried to cross below the support, something like this was the support level, and it tried to cross this, but immediately the price opened here and tried to push down, but buyers took part and they started pushing the price upward, and following this candle we can see the upward movement here. So this is how a typically pin bar looks like. This is the bullish pin bar. Even though the candle looks, the color of the candle is red, but since it's getting formed at support, because of that, the irrespective of the color, this candle is called as bullish pin bar candle. Same way for the bearish pin bar candle. See here, the top of this is the resistance. After some upward movement, after the upward movement, the price started moving upwards, crossing over the support resistance level. This is the resistance level, and sellers started pushing down the price and closing the candle something like this. It looks like this. So some of the examples like this. It's not uncommon to see back-to-back or double pin bar pattern. Sometimes there can be a multiple pin bars at the again. The spin bars are representation of fight between the bulls and bears, where the bulls are trying to take upward after a downtrend, but still there is some fight between the sellers and buyers, and this is represented in these three pin bar candles. These patterns are traded just like a normal pin bar, except they provide a trader with a little more confirmation since they reflect two consecutive rejections of a level. So twice the sellers tried to push down, but buyers also had to struggle for few more minutes or few more period of time. So they tried to take over the sellers, and after three candles, if you see, the price started moving upwards like this. Pin bar buy signals with uptrend. See, trading with the trend is arguably the best way to trade any market. A pin bar entry signal in a trending market can offer a very high probability entry and a good risk reward scenario. In the example below, like this, a pin bar signal that formed in the context of an uptrend market. Again, this is moving upward and upward, just like higher highs, higher low, higher high, higher low. But in the higher low, there is a pin bar candle. So this is typically a price continuation pattern, that which means uptrend continuation pattern. Bullish pin bar, since the implication of the rejection reflected in the pin bar is that the bulls will resume pushing price higher. Same way pin bars against the trend from key chart. So when trading a pin bar counter to or against a dominant trend, it's widely accepted that a trader should do so from a key chart level of support or resistance. The key levels adds extra weight to the pin bar pattern, just as it does with the counter trend inside bar patterns. Anytime you see a point in the market where price initiated a significant move, either up or down, that is the key level to watch for a pin bar. Here we have a key resistance level. When the market started moving upward by creating higher highs, higher low, higher high, higher lows, higher high, higher lows. It tries to cross the previous low, but again there is a pin bar formed here, the short pin bar. You see even this pin bar. After this, there is a bull trend, and again there's a big bearish candle formed here, and after which it started falling down. So inside pin bar combo pattern, see while moving downwards, this is a continuation pattern. After this pin bar, it started falling down, and we can see there are many pin bars in between. But this pin bar, there is no previous candle crossing over of this high of this pin bar. Same way, so we have to identify at a certain levels. Say for example, this inside combo pattern, they say this is also one of the effective pattern. See here in the bank nifty, if you see how pin bars can be traded here. See on 22nd March of 24, on the 22nd March, after some upward, after consolidation and after some upward, it tried to cross above the resistance line, but the sellers are not are not are not allowing the price to go above this, and so they started pushing down here. After this candle, if you see after this bearish pin bar, even though the candle is green in color, but the way it's getting formed at the higher level, this can be called as bearish pin bar. So after that, the price started falling down here. Same way, if you see in the previously on the same day, 24th March, there was a big pin bar candle. If you see, this is a big bar candle, and especially where we can how we can trade with the pin bar is the when the pin bar is formed, we can always keep 2 or 3 points plus low of this candle, and we can take position, and we can keep a stop loss here, which is the high of this bearish candle, bearish pin bar candle, high of this plus some 2 points, and accordingly we can take a profit, or 1 is to 2 or 1 is to 1, compulsorily 1 is to 1 or 1 is to 2 if we know how to trail the stop loss. Sometimes if you are sitting in front of the system, it's very difficult to control your emotions and to trail the stop losses, because the way it moves, especially if you are trading with options, the moment it moves upward and go downward, the price gets flicked, and if you start seeing the flickering of the price, you will get disturbed. So it's always ideally it's always better to take 1 is to 2, but after 1 is to 1, when it crosses, we just have to bring our stop loss to below this so that we can catch this. For example, see here we see the price range. If you see short position, my entry is here, stop loss is here, which is 68 points, and same day it came down to nearly 98 points. So it's always better to trail the stop loss after 1 is to 1. Sometimes we get a very good result, something like this. And after this, see here, if I had taken a long position above this pin bar on the same day, if you see on March 24, 22nd, after this, it was nearly 154 points stop loss on the bank nifty chart. So if you see, same 1 is to 1, It could have been 1 is to 1 minimum. So sometimes it's very difficult to trade with this long tail. So in this case, we can always take half of this candle as our stop loss, and we can do 1 is to 1 and 1 is to 2 by trailing the stop loss. For example, if my stop loss was here, my entry was here, it could have taken at least 1 is to 2. To take 1 is to 2, always learn to trail your stop loss. After, say, for example, if a stop loss is 30 on the option chart, for example, like this. See, similar to this candle, for this candle, 9:45 candle of 22nd March, 9:45 candle, say 22nd March. For example, if I had taken a trade here, long position here, and my stop loss is assuming that on the option chart, my stop loss could have been 60 or below this candle, because this is the candle which is crossing above this. So I'll try to take half of this above this, or just 40 points of this. So assuming that my stop loss is 40 points of this, I can always take 80 points as my 1 is to 2 target. See, this is how it. My entry was here above this, and my entry was with this candle, and I'll try to keep a stop loss of 40 points off of this candle. So 1 is to 2 could have been target. After, when it starts moving upwards, I'll try to bring my stop loss to this point. Okay. Sometimes my stop loss gets hit, because we don't. That's the beauty of the market. That is the strategy. Because especially in the option trading, we really don't know how it's going to react in the next moment. So it's always better to trail or stop loss and trade accordingly. See, on same day, 22nd March, if you see, there is a big bearish pin bar after some consolidation and at the resistance level. This is mainly on the option chart. Even you can use directly the option chart. Whenever you get such pin bars, bearish pin bar, we can always trade. If you have good enough money, you can short sell this option 46,500 CE after this bearish pin bar on the call option. You can sell this. As you know, by selling options, you have double edge. So one is that in case if it moves against your in case if it goes with your bearish, you'll get the good returns. In case if it gets into consolidation, again a seller will get the benefit of time decay. That is the advantage for a seller, option seller. So or you can, for this candle, assuming 245, if you see 245 candle, here this is the 245 candle pin bar. If you see, if you had taken an entry here 289, it went up to almost, you could have taken 40 points stop loss and 40 points profit. So we can find out this pin bars directly in the option chart or on the index, either Nifty or Bank Nifty. See, we can see some of these examples, pin bar examples. If you see here on the upward, it is a bearish. There are multiple pin bars here, 1, 2, 3, but high of this is not crossed. So even if you had taken a trade below this, even it went down and again it went backwards, but the next candle again it started moving downwards. So with these scenarios, we should always learn to trail our stop loss. Sometimes, like while going like this, we may not be able to take the complete downtrend of this. See, that is the fact. That's the reality of the market. We may see this kind of downward in the chart, but in the live market, we may not be able to capture the full downtrend of this. So we just have to trail our stop losses based on our appetite, based on our risk appetite. So that's how we can trade. So to get more such updates, subscribe my channel Pure Points with RK. Stay connected with me. I'll start posting live trade also, how I trade, how I take position based on this candle, how I mark my support and resistance levels here. Generally, I use 15 minutes time frame to mark my support and resistance, and I'll wait until my levels when it gets formed any kind candlestick patterns, whether it's bullish engulfing or bearish engulfing, something like this is bearish engulfing, bullish engulfing, this is bullish engulfing. I wait for the pattern to get formed and I'll take my position accordingly. So for today, that's all. Stay connected with me, subscribe my channel, and stay connected with me to learn more. Thank you.